Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Bob Iger is once again leading Disney through a major strategic change. Remember when he started as CEO of the company, he's the one who spearheaded buying Marvel and then eventually Pixar and Lucasfilms, really changed the direction of the company's content. But now the move is not about content, it's about distribution with streaming, with changes to the cable bundle and also streaming, and now a $60 billion announced investment into parks and entertainment. So today I want to dig into exactly what I think Iger is thinking from a strategic perspective, because Disney, the stock is really down and out, and there are some short-term reasons for that. But long-term, if Disney can make the right strategic moves, that's what really will turn around the stock. And so that's what I'm focused on as an investor and somebody who's looking at the asymmetric upside with Disney stock. My name is Travis Hoyam. Thanks for watching, and don't forget to subscribe here on YouTube. Give this video a like, and I want to thank this video sponsor, The Motley Fool. Check out fool.com/ASYM for The Motley Fool's top 10 stocks to buy right now. I got a link to that on the screen. And I want to go through just a couple of things from Disney's recent financial reports to show the trends, and this should kind of lay the groundwork to how to think about the company's strategy moves recently. This is the media and entertainment segment results. Linear networks is what I want to highlight. You can see that over the past year, read this left to right, Q3 2022, $7.2 billion in revenue. Q3 2023, that goes down $500 million to $6.7 billion in revenue. Not surprisingly, operating income dropped $600 million over that period of time. So the linear business, the cable bundle, is really in decline. That is something that we have known for quite a while, but it's really tipped in the last year that there are so many people canceling that any price increase is not offsetting that. That's why we see the drop in both revenue and operating income. On the streaming side, Disney has built a very big business, $5.5 billion in revenue, continues to grow. The subscriber growth, the number of people subscribing, not growing the way that they were a couple of years ago, but Disney's now implementing price increases, also adding advertising. So I think we're going to see steady revenue growth, but still losing money from an operating income perspective. Disney has said that that will probably change in about the next year, but there's two pieces to that. You need to increase revenue from, like I said, increasing prices. That's going to be hitting fairly soon in the next quarter or two, along with those advertisements. And then also there's a lot of cost cuts that don't happen instantaneously. When Bob Iger came back, he cut a lot of costs from a content side, but a lot of the things that were already in the works or contracts that were already signed were deals that needed to be completed. So that takes a couple of years to really flow its way through the system. So I think those operating losses will improve, but they have not yet. The other thing to keep in mind is parks and experiences are doing extremely well. The run rate is nearly $10 billion in operating income per year. It's a growing business. It's growing both in the US and internationally. So that's why they have decided to invest another $60 billion in this business over the next decade. That's not going to be put in the ground over the next year. It's going to be a very long process, probably add another theme park. Wouldn't be surprised if we see a few more cruise ships. So this is where there is heavy investment. With that backdrop in mind, I think it's important to think strategically about what Disney is becoming as a content company. So you have all the content studios, the Marvel, Pixar, Disney Animation, Lucasfilm, all of the legacy assets. That's not going anywhere. No matter what happens strategically, I think that is still the core of Disney as a business. But for decades now, the company has been growing off of the cable bundle and extracting more and more money from that. More and more people were getting cable. They were increasing their carriage fees. It was just a phenomenal business to be in. ESPN spearheaded that. Disney owns 80% of ESPN. And so that's where the profits and the revenue from the linear business that I talked about earlier come from. But now that that is in decline, there's questions about what do you do with that business? Because does it make sense to own ABC or even ESPN in a future where you're making most of your money at the parks or on streaming? I think the answer is probably not. And so that's why we have heard in the last few weeks that Bob Iger, Disney, is having initial discussions to sell some of those linear assets. ABC is clearly the big prize that potentially another buyer would be interested in buying, but this probably isn't going to be a deal that happens overnight. There's going to be regulators involved. But it makes sense probably to cut off a lot of that cable tie, as that's a declining business. Disney probably isn't the right company to extract the most out of that going forward. So I wouldn't be surprised if we see them sell some of those assets. So what do you have left? Well, you have streaming and you have the parks. We talked about the parks. I think that's a phenomenal way to give people great premium experiences, especially now that you have a streaming service where you have people's emails, you have their information, you know some of their preferences. You're going to be able to tailor your marketing to them. So I think that's a really great tie. The question is, what happens with the streaming business? What is the bundle that Disney is able to put together? And then how is it distributed to customers? This is one of the big takeaways from the recent Charter deals, that Charter is now going to be a wholesaler of Disney's streaming services. So that basically means they're a reseller. So they have somebody who's subscribing to their broadband service. They say, hey, why don't we add Disney Plus or Hulu or ESPN over the top? Those are products that they can now sell to them, potentially be a little bit stickier. Charter's going to take a little bit of margin, but Disney doesn't have to do all the legwork of selling those products. And if they can reduce churn a little bit, or the number of people that cancel each month by bundling these services together with another value add like broadband, that could be really good for Disney. Because remember, Disney is going to also make money from advertising. So I think what we're going to see is more and more deals like that. You're going to be able to bundle Disney's streaming services with basically anywhere that you get broadband. Put a different way, the number of ways that those streaming services are distributed to customers or sold to customers are going to increase. And then the ultimate goal for Disney is to increase the funnel to the ultimate profit center, which is the parks and experiences. That's the strategy that I think we're going to see playing out for Disney and Bob Iger. They want to make money on streaming. That's absolutely true, but it's got to be a sustainable business. It's got to be a profitable business. Even sports is going to be the same thing. I think they'd love to be in the sports business, but how do you make that sustainable and profitable? What they control their own fate with is the parks and experiences. So that's why they're putting $60 billion into that. And as a whole, I think this strategy makes a ton of sense for Disney, but there are a lot of things that need to still play out. Can Disney sell some of those linear networks like ABC? Can they make ESPN a sports bundle that's really attractive to go over the top? Can they get other companies to distribute their streaming services, the Charters, the Verizons, the AT&Ts of the world? All this is a little bit unknown at this point, but I think we're starting to see the strategy play out. And I'm very bullish on what we're getting as investors for the price of Disney stock today. What do you think about Disney and the future look of Disney? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.